All right, we have some price drops here in the Utah housing market. I'm going to share with you this graph here, and I'm going to show you exactly what's going on with the price points dropping and what potentially could happen here as we have now just entered 2025. Before we do that, make sure you smash that like button, help me get this video in front of more people. Make sure you subscribe, that way you're notified when new videos drop. And when you do need a realtor anywhere in Utah, remember, Dinko the Realtor has your back anywhere in Utah. My contact information is down below in the description. Back over here to the graph, if we take a look here to 590,000, so this is going by quarters. And of course, quarters end in March and then they end in June. So we hit the peak in May of 2022. However, this is showing June, which was the first decline that we had in that second half of 22 of 590,000. Then it dropped all the way down to 510,000. Again, that was January of 2023. So that's the start of the first quarter of 23. So it's not showing every single month. That's why it's a little bit different here. But we see that the prices have been going up in the spring, down in the second half, up in the spring here again in 2024, down in the second half. This 565 though here at the end is actually much lower. Well, not much lower than that, but it is lower than that by $10,000. And let me show you, I don't know why they haven't updated that here, but if we take a look here, $555,000 was the median price on the graph. The MLS has it at 565,000. So I'm not sure why they're doing that. And this was 2,085 single family homes that were sold December 1st to December 31st. And they always do, every MLS does single family homes. They don't take the condos and the townhomes. Whenever they're saying median price, they're always looking at just a single family home. So no multifamily, no condos, and no townhomes. Now back over here to the graph. Is this going to continue going downwards, or is it going to rebound like it has in the last 2 years in the spring? Also, we see here that we're not hitting the lows that we hit the previous year. We didn't hit in 2023, hit the previous lows that we had in 2022, and in 2024, we didn't hit the lows that we had in 2023. So if there is no recession, if we don't have any forced selling, it seems like the market always rebounds in that first half of the next year, and it rebounds a little bit higher than the previous year, and then the lows aren't as low as they were the previous year. So we see what the graph is kind of showing us right here. Now, are these price drops going to continue going down? Where there are key differences this time in 2025 compared to 2023 and 2024 that I'm going to review with you. That way you know if it's a time for you to buy or if you want to wait. And a lot of this really just depends. Are they going to be able to keep kicking this can down the road? It seems like they are. It seems like the money printer just isn't running out of ink, and nobody, no administration, the previous administration, the next one that's coming in, nobody really wants to deal with the debt ceiling. Nobody wants to reset on their watch, and we're going to see what's going to happen. We're going to see if they're going to keep kicking this can down the road, continuing to print money. Donald Trump wanted to eliminate the debt ceiling. They've been kicking the debt ceiling into next year throughout all of Biden's presidency. So who's going to really take care of that? Who the heck knows? But right here, key differences. What's going on? Well, right here, oh, let me remove myself. The under contracts. Well, first of all, I showed this in a previous video, but look how much more inventory we have this year compared to the start of last year. We have 9,379 units on January 10th compared to 7,600 units. And the under contracts are actually negative. This is the first time that the under contracts are negative since March of 2023. Even though inventory was hitting at a higher pace in 2024 compared to 2023, and we were getting positive net gains every single month when we were comparing month year over year. However, under contracts were higher. There was more activity, more buyers buying, especially in September, October, when the Fed did their first rate cut and interest rates actually did end up hitting 6%. There was even maybe a week where you could get an interest rate 5.8, 5.9%. We did see under contracts pick up. However, that was very short-lived, and under contracts, ever since Donald Trump has won the presidency, interest rates have been going up and under contracts have been going down because the worry about inflation coming back with his tariffs and things like that. So we're not going to get into the political aspects of things. But one thing that I do, and I brought this up in the past, housing industry urges Powell to stop raising interest rates or risk an economic hard landing. Now, the Fed did their rate cut. They did 2 rate cuts, and well, actually 3 rate cuts. And what they've done is they've brought down the Fed rate by 100 bips, which is 1%. And that has actually correlated into the 10-year now pivoting, and the 10-year is actually going up. Well, the 10-year is what correlates the most with what's going on with interest rates. And we are at a 52-week high when it comes to the 10-year Treasury, which is just wild. The fact that the Fed is cutting rates. And if we take a look here at the mortgages, we're at above 7%. I mean, we're still not at the peaks, which means that maybe the lenders think that this is going to be short-lived, so they're not increasing their fund rate that the lenders have over that 10-year over the Fed with their borrowing the money. Anyway, we're not going to get into all that, but we see that the interest rates here from September's low have started creeping back up, and they're up above 7%. And that is not good news for the housing market, especially if under contracts are going to continue declining. And in the second half of 2022, so look, life gives you options. Whatever you want to do, if you want to buy right now, and I have people that they're wanting to see what's out there. We're out there negotiating, and look, I'm getting them the best deals possible. Right now, here to start the year, if the trends do hold, if we do see the uptick in the spring like we have the last few years, then of course, right now and going into February is when you want to get into market, especially because interest rates are high, there's less buyers, under contracts are down, and then on top of that, you have a lot of inventory to choose from that through that second half of the year didn't sell, and now it's been sitting on the market for quite some time, and those sellers are getting desperate. So you're able to get those best deals. However, if the recession doesn't come, if unemployment doesn't come, if they do maybe potentially lower these interest rates, we might see an uptick again here come March, April, May, going into June. And then of course, I mean, all the data is indicating that the second half isn't going to be skyrocketing home prices based on the inventory that we have here. Let me go back over here. Based on the inventory that we have, we see that we have much more inventory. Under contracts would have to go up severely in order for prices to continue going up in that second half and not correct themselves. At least that's in my opinion. We're going to have to follow what's going on with interest rates, what's going on with the under contracts, and also what's going on with the listings entered. So that's what I actually want to go back over here. And I'm going to remove, well, actually I don't have to remove myself entirely on this, but if we take a look here, in listings in 2023. So we had those price drops for 9 consecutive months starting in June of 2023 and bottoming out in January of 2023. So from June of 2022 to January of 2023. And then the thing that saved the housing market from continuing those price drops is that the inventory, the listings that were hitting the market were all of a sudden negative substantially when we were comparing month year over year. We see negative 1,000, negative 1,600, negative 500 down here. So these were all the listings that were being entered less. So in 2023, we got a substantial lower amount of new homes being put on the market. However, in 2024, that has changed, and that's why we see that inventory increase. In 2024, we see 500. 1,100 even one month, 800, 600, and down here in December, just 1. So this is what we're going to have to pay attention to. Is the inventory, well, the new listings, are they going to be hitting the market at the same pace that they were in 2024, but are the under contracts going to now start going lower, where we're now entering back into those 2022, where all of a sudden the previous year has less going under contract. So that's your recipe for home prices potentially continuing going down, especially if interest rates are going up. And then of course, if the recession comes, because then you got forced selling, unemployment's going up. So it depends if they're going to allow that reset or not. I went where Mitt Romney's son, Josh Romney, he was at this event speaking, and he's saying, and I asked him some questions. He said, we're in uncharted territory where the national debt to the GDP is above 100%. They didn't think they could cross that threshold, or it would devalue the dollar. Other countries and people wouldn't want to invest into the treasuries and bonds. However, they say now that they think that it actually might be 200%. And he says, nobody really knows. Something can happen in 2025, something can happen in 2030, or 2040 when we finally do hit that 200% national debt to GDP. So you know, what's going to happen? We're going to have a reset at some point. However, nobody wants that reset on their watch. I went over in previous videos, you know, FHA allowing 25% reductions in their monthly payment for 3 years. People had all the way until all of 2024 to file for that. The VA didn't allow foreclosures until the end of May. Then they said until end of December. And there's actually some COVID relief money. I went over this on the previous video as well, where they were actually able to use the COVID money, and going all the way into April here of 2025, people can still actually get some help on their FHA loans. Then the student loans have not yet resumed reporting. I can't find any new data, any new information on it, other than what's a couple of months ago that they should resume in January. We have a Republican House now, Republican Senate, and a Republican presidency. Republicans were the ones that were against passing the student loan forgiveness, and the Democrats were pushing for the student loan forgiveness. So now if they don't resume that delinquency reporting, then we're going to know that they're probably on the same side. And even if they do, they're still probably on the same side. None of these politicians really care about you and me or anybody else other than their stocks, their investments, growing their salaries. That's why I don't have any faith in the government. I don't have any faith in any politicians. The only thing I do have faith in is what the numbers are saying. And the thing is, they have impacts with what these numbers do. However, these numbers are what they are, right? And this is the under contracts. So if we take a look here, this orange line at the bottom is 2024, and this yellow one is, and they kind of made it a yellow orange, and then the orange kind of a red orange. So the darker orange and then that yellow one, so the yellow one is 2023. We see that the under contracts in 2023 were less than they were in 2024, which is that orange line that's above that. However, if you take a look at this dot right here, look at that. To start January, 2025 has less under contracts than 2023 and 2024. Yet, we have a lot more inventory than we did both of those years. Interest rates are actually on their way up, and there's talks that the 10-year could actually hit 5%, which means we would be approaching above 7.5%, maybe even 8% on those interest rates. The housing market, the car industry cannot handle that. So it's always up to you with what you want to do with the information. You know, the data is what it is. Are we going to see a huge crash? I don't know. Are they going to let that happen? We don't have a free market anymore. There's a lot of manipulation. There's a lot of money printing. I guess the national deficit doesn't matter. There's no debt ceilings. Those don't even matter. They'll just pass another one again, even if they hit it sooner than what they anticipated when they passed the previous one. So as far as all that happens, do I believe we're going to have a recession or a reset? Yes. All the basic economic principles, when you overheat an economy, and they bailed out Silicon Valley Bank, remember that, in March of 2023. So once they bailed that out, I think that everybody said, oh, they're just going to keep bailing everybody out. They bailed out the next two banks that failed as well. And I think that's what's propped up the stock market. And until we see a major correction in the stock market, I don't know if that's until we do that, I don't know if that's going to correlate to what's going on with the unemployment rate. Once companies start losing their stock value, then they're going to have to start laying off and firing people, because now they have to do cost-effective measures in order to keep revenues high so people see value into buying their stocks, investors. So until we start seeing things give, right, the stock market pulling back down, because the stock market usually always corrects before the housing market does. And what's going on with the unemployment rate, it just today, and that's why the 10-year actually went up to a 52-week high. The unemployment rate came in at 4.1%. They were anticipating it was going to stay at 4.2%. Job openings, that's another one. But remember, they revised their data. What was that, in August, going 6 months back, saying, oh, hey, we were wrong. There was 818,000 less jobs created. Oops, forgot about that. So is this job data real? People say, these jobs are open, they're openings, but they're not really filling in them. When I talk to people, they're saying they're having a hard time finding new jobs. So the data that they're giving us, who knows how accurate it is, what's going on, but we definitely see that, there isn't those foreclosures. They're putting parameters in place. Again, those parameters that they're putting in place, those protections, that's not a free market, right? A free market, if something's going to fail, if someone's going to fail, unfortunately, you're supposed to allow them to do that, because that's capitalism. You're not supposed to bail anybody out. However, we're seeing that they are doing that. And again, that's the data. When you need to get a hold of me, my contact information is down below. I have people reaching out all the time. It's actually picked up. They're wanting to strategize. They want to see what's going on there. They want to get put on my home search sheets so they can kind of keep track of the market in their area. So any questions that you have, feel free to get a hold of me. I'll definitely share information that is particular to what you're looking to accomplish, and any information that I need to clarify for you. Sometimes people have said that something hasn't made sense, and I try not to spend too much time on a topic that I've been on before, just because of the people that are rewatching this stuff. I don't want to kind of beat a dead horse, but there's a lot of information. There's a lot of repeating information and a lot of old information information that is very important, just like the housing industry urging Powell to stop raising interest rates. And again, when you need a realtor in Utah, oh, right here, a housing industry urges Powell to stop raising those interest rates. And when you do need a realtor in Utah, anywhere in Utah, Pinko the Realtor has your back.